If you've ever felt like winning trading strategies are just set aside for gurus or influencers, not for real people, then this video is going to hit a little different. I trade this strategy Monday through Friday live on recording. I've been trading for 2 years now. I put together this group called the Midas Touch Trading Group. And today I'm going to show you the strategy of what I trade. I'm going to show you the results and then something new that we're rolling out. But really quick, if you don't know me, right? I've been trading 8 years, 4 years profitable. This is the group that we put together, 652 members inside this group. No, it's not $1 million a month. It's $47 a month. I know how hard it was for me starting out, and all of these high bars to entry, these paywalls that these fake influencers put up. And I wanted to make this so valuable. Look at our classroom. It's ridiculous. The amount of information in this, it's not just the information, the way it's laid out. We took 2 years to lay this out the right way. And this right here, the crazy horse orb, does it work? Well, let's go. Let's dive in, because I could sit here and show you my results, and then you're going to go, well, like, what about other people? That's all that really matters, man. Even if I wasn't profitable, isn't all that matters is that the community is profitable? Because we are on fire right now. So let's go. Win of the day from Harsh. Tim says, I sometimes love scalping. Stuart, day 10. Now Stuart is trading our like mechanical version of what I'm going to show you. Day 10, hasn't lost a day yet, right? You can see here, has not lost a day yet. Another W. Let's keep it moving, right? Double win Wednesday. First day live, first win. Waiting for payouts after today's trading with Mike. Nice. Crazy horse rides to a win. This is 6 hours ago. Still today, this morning, right? 2.2R, learning to trail with a shelf method. Something else that we teach, right? Euro USD, day 6, green streak. So day 6, right? Let's go. 2 W's again today. Small scalp, 14 days. Look, Rob, 14 days winning. Asia, move. It's 2 small wins. London open, 1%. I mean, look, the wins just keep going and going and going. And there's freaking 1,100 pages of wins. It's like, it's ridiculous. Look at the calendar. All right, so now you know, right? The receipts are with the community. I don't need to sit here and go through it. But if you don't know me, and you're like, who is this guy? Now you know, right? 2 years. Last year, I took a $98,000 account to about 180. It was actually 186. That was fun. I did it in 9 months. Hey, this is what I did, right? About 5.5 years ago, I put $100,000 in. I racked it up to 875. Cashed out a lot. Racked up even more. Then I started this group about 2 years ago, roughly. So what is it that we're doing? What is it that I found? Well, here's the thing. I've changed my strategy a few times over the last 4 years. And let me tell you what it was that got me profitable first, and then I'll tell you about the strategy, right? So what got me profitable was seeing somebody with much more experience than me, which was my mentor, use what we call dynamic money management, where he's leaning into trades that he believes in and then backing off on trades he doesn't believe in. And the ones that he does believe in, he's even stacking orders, like multiple orders. And seeing that in real time gave me confidence to do this myself. And so that's the essence of like what made me profitable. And so let's go to the chart. Here's today, okay? And I'll go through everything here step by step, but just very quickly, this morning I'm on live stream. I said, this momentum here, right? This downward pressure in the market, you can visualize it with this indicator. This is a custom indicator. Don't worry about the indicator. Just stay with me. You can visualize it, right? So if I said, hey, what's the biggest, out of all this visible range, what's the biggest impulse in your visible range? And what direction is that impulse in? Well, it would be this one, and it's down, right? So I said, you know, what that's going to do, because just if you take price completely off the board, like just erase price and just look at momentum, what that's going to do is put pressure over here, right? So this is going to put pressure over here to sell. That's how momentum works. Now, momentum can flip. Let's say we get some price action that kind of is more bullish over the next, 24 to 48 hours, and we see something like this happen, right? If we saw that, momentum flips. So momentum kind of lags, right? This is why you see, I'm a price action trader, right? ICT, SMC, ABCDFG, all, I'm a price action trader. Look, reality is you're only trying to trade like price action because you want a stellar entry. You're trying to find an entry model. Stay with me. You're trying to find an entry model, right? What I'm showing and the difference between pretty much everybody else, I haven't heard anybody show you this. Nobody, show me a guy on YouTube saying delete price from your screen. It's kind of weird. But this is how you can kind of see the future and determine what you should be looking for. Sort of. And I'll get to that. Hold on. Just stay with me because this is just momentum theory. And I've never really talked about this on YouTube before. But this right here is what allows me to sort of gauge whether or not my setup, we'll talk about the setup. I'll take you step by step, but you need to know this first, whether it's an A setup, a B setup, a C setup. And it's only with experience and sort of seeing the market the way I see it, I think, that you're going to be able to gauge yourself. There's not like a mechanical checklist for whether or not it's an A setup or a C setup, because there's so many dynamics. I could go through them all, but there's a lot there. I don't want to go down that rabbit hole right this second. But if we saw this right here, momentum would flip, right? So I told everybody that that's going to make it difficult for price to break higher. And what happened? Well, look at what happened. Later in the day, price finally fades, right? And that little X right there, I don't remember exactly where we were at. I think up here, I basically said that we're going to hit that little X right there. I'm not a fortune teller, all right? Obviously. It's just probabilities. And this is something that I say a lot, but you need to trade probabilities, not the possibility. Don't let the possibilities bog you down. If you trade possibilities, you're going to have what's called analysis paralysis. You're going to be scared to like pull the trigger. You're going to have PTSD from losing, right? You have to let that shit go. I mean, you just do. And trade probabilities. So let's get into what I do, like the actual system, okay? I'm going to delete the bands for just a second. I'm going to get rid of the bands for a second and like just show you and get rid of the X and get rid of these, make it nice and clean and just show you simply what we do. Okay. So what I like to do is wait for the New York session to form. Like the New York session to start, 8:30 a.m. Central Time, 9:30 Pacific. And you'll see there's a little indicator. One of our community members made this indicator. It's just nice and clean. I wait for a 5-minute candle body to break outside of that range. Here you can see it breaks, and it not just breaks, right? We're not just trading the breakout. We're trading the close. See how that 5-minute candle closes, right? So this is, I'm going to get rid of the entry real quick. This is our first entry. Now you might ask yourself, okay, all right, well, where do you put your stop? Here's what most traders do. Let me show you. And I'll get into the dynamic money management side, and that's really what changed the game. But look, most traders do something like that. And I think today you would have hit, actually. This would be like a 1-to-1, I think. But regardless, this is what most traders are taught. Like put your stop loss behind the last swing, or some traders are a little bit more, into like fair value gaps. Maybe you protect it with a little fair value gap right there. Maybe you go down on a 1-minute time frame. We could get into it, but that's what most traders are taught, right? Let me show you how I do it. Dynamically. What does that mean? We take our visible range. I make sure I'm on auto. See the little A right there? That means the chart's on auto. So when I zoom out, price just kind of stays with me, right? And if I zoom out to about the overnight session in view, something like this, about 130 candles or so. I don't know exactly how many candles this is. How many candles is that? It's 152. We'll go about 130 right there. That looks like, to me, that looks good. About 130 candle. I just want to see the overnight session. I want the volume in that session to be in my field of view. That's it. That's all I'm looking for. I use this long and short tool right here in TradingView. So I'll click the long, I'll pop it on, bam, there it is. Okay, that's the distance. Now, you might say, well, hold on a second. That's pretty close. And you would be right. That is pretty close. 27 points for this volume, this little range is pretty close. But what else am I doing? Well, here's the second step. We put on the indicator. What does the indicator show? It shows momentum. What is the momentum saying? Follow it. Look. Is it red or blue? Is it going up or down? Okay. So if you just saw this, do you think that that is an A setup? Does it look like we're going up? Probably not, right? So immediately you go from an A to a B. Now, what else do we have? Maybe you're a structure guy or gal. Are we an upward structure or downward structure? Well, on this time frame, which is what I'm trading on, the 5-minute time frame, sometimes I trade on the 1, sometimes even on the 15, but for this example, we'll just keep it really easy. What was this right here? Well, this right here was a little break of structure. We had to change a character up here, break a structure right here. That's it. That's what happened. So what structurally speaking, what direction are we in? Down. Okay. So you got two things going against you, structure and short-term momentum, right? Now, here's the third step. Zoom out. In your field of view from like yesterday, possibly even, you could even take the day before, 3 days or so. In the last day or 2 or 3, what was the biggest shift? Was it up or down? What was the biggest impulse? And we already went through this. It was this right here. So that is 3 things right there, right? So that takes it from a B to a C. This is a C setup. So am I leaning into this trade or am I backing off this trade? So now you're kind of seeing these are the things. Does it always work? No. Today it flew up like 80 points or something. So here's what today did. Do we still take the trade? Absolutely. That's the entry model. That's the entry model. Look what happens. I'll play it out. It hits, no problem. Most of our days, for those of you watching that are trying to get profitable, trying to get consistent, this is 50 to 70% of my days. Our days are 50%, at least more than 50% is this. Even if it wasn't 50%, it was 40%. Okay, so 4 days out of every 10, I'm done in 10 minutes. Like I'm going to play golf. I'm going to hang out with my kids. I'm going to do whatever I want. My dream life, I don't know about you guys, and you could tell me in the comments, what's your dream life? Because my dream life is to not be on the chart all day. My dream life is to trade for like 30 minutes and be done. I want to go live my life. I want to take the money I'm making here and go do something productive. And maybe that's not your dream life, but that's mine. Now check this out, because that's just the first key. You have to know the other pieces to the puzzle to really understand what I'm doing here, or else you're just going to watch this video and think, oh my God, I'm going to go back test that. You're going to fail, because that is not it. That's not it. What if price hit the stop loss? What do you do? Well, with dynamic money management, you have the ability to call audibles, guys. As long as your trade idea is alive. And this is what separates, here we go, pay attention, trade ideas, right? Trade ideas and entry models. So what is this right here? Is this a trade idea or an entry model? You might say both. You kind of would be right, but you're kind of wrong. We're going to call it an entry model. The trade idea comes from, where is your invalidation? Well, you have a stop loss, Mike, right? If it hits that, isn't it invalid? No, actually it's not. The invalidation zone is down here. It's below not only structure, but the opposite side of the range. Why is it on the opposite side of the range? Because what I do is I use the 15-minute opening range as a temporary daily bias, and it does not flip easily. It doesn't flip. It does flip sometimes. Don't get me wrong. We could talk about that. But it doesn't flip right away. Typically, it does not do that. Sometimes it does, no doubt. And if it did, if it went down here, I would get out of this trade. It would be a loss, okay? But here's where the extra juice comes from the extra bit of, we'll call it edge, right? The edge comes from. Ready? So we're done for the day. This is a done day. We could move on, but I know a lot of people sit on the charts all day. They want more setups and everything. And what ends up happening, let me show you. Ready, guys? If you're really going to pay attention in this video, I'm going to show you a bunch. This is going to be, I've never really shown all this in one video. So this is kind of the first time. So there's a couple of things. I'm trying to show you the strategy, the orb, and I'm going to show you that. But right in here, we have 6 candles that push up. We actually have 7. See the little blue dot? This is a little custom indicator that shows 6 candles pushing in one direction. What is that? That's momentum. Remember what I said, right? Momentum doesn't fade easily. Even if price backs off and takes forever, which it did today, it backed off. It actually did its thing in here, backed off. When you see this, I put a price target right out here. Remember those little, you can rewind the video. It had a little circle up here. That's because I said price is going here. Why? Because judging from this spurt, this momentum push, this little bit of an impulse right there, it should follow through and most likely grab just a bit higher. That's it. It's as simple as that. I know it sounds rudimentary, right? But here's what happens with Crazy Horse, all right? Price pulls back to the center band. This is another entry. If you were crazy enough to enter a second time in the day, which a lot of people are, it's FOMC day. You're nutty if you're doing this. But in any case, that almost hits TP. That would have been pretty much a break-even trade because when you're 3/4 there, you have the option to go break-even, and I definitely would be protecting my win from the morning. So these are decisions. See how that's a decision? You have to make that decision in order to protect your capital. You're making these decisions in real time. So you're either destroying your account or you're making smart decisions, and it is hard, man, because you're trying to predict the future, right? But we know we got high time frame momentum down this way, right? We have short spurt momentum up. This is going to get hit, right? What happens? Let's play it out. We're going to play it out to the news. Now that lower band is another entry for Crazy Horse. Why? Because our directional bias is up. So we have to be thinking up. And let me see if we get, I didn't even know if we got another entry here. We do. So it's actually not the upper lower band. It's the bottom lower band or the breakdown. So this would be another entry right here. Not a great entry. Not a great entry, right? Because band is rolling over, showing negative momentum. It's not a great entry, but your temporary daily bias is up. So you can take this. This is a valid trade. What happens afterwards? I don't even know. Let's see. So here's a good example where price goes past the stop loss. Now, some of you might say, well, then you lost that trade, right? Maybe, because the audible with dynamic is that you could potentially let it go and keep your invalidation zone. So your actual real final stop is down here. For all of these trades, it's down here. But when I show it like this, people freak out. They go, oh my God, a negative risk to reward. What are you doing? Like your losers are going to be it's going to be real hard to get profitable. Really? Like, should I go back to the group and show you what's going? Do I have to go back? It's not a problem if your win rate is high and your profit factor is extremely high. Do you understand? Listen to what I'm saying. A negative Sharpe ratio or a negative risk to reward is actually not a problem. You can ask ChatGPT. You don't believe me? That's fine. It's not a problem as long as you have a high win rate and a high profit factor. We did 500 trades. The community members did anyways, every single one of them won. All 10 people that we chose to do these trades won. So you can decide to get out here. Like, I'll give you a good example. Here's a good example. Let's say there was a 6 candle rule to the downside right here. Like I saw momentum right here to the downside. I kept going. Yeah, I'd probably get out, man. I don't have to wait for price to hit my invalidation zone. It's already past my stop loss. But and does that mean don't rock with the stop loss out here just in case you get a spike? No, I mean, set up your stop, but be safe, right? But you don't have to. And now watch what price does. Ready? Watch. Look what price does. Okay, I want to play it out for the day. So what do you see happening? What do you see? You see that negative moment. You see price spiking right back up, which it gave you a nice win here easily, right? Then what? Now you're in negative momentum territory. You're not taking longs right here. Like you shouldn't have even really taken this long, right? That would have been a very risky long to take. Okay, so put this back. Actually, yeah. So now the 15-minute range disappears because we're later in the session. Price reaches the invalidation zone. And no, it's not about wicking down there. It's about closing down there. It still hasn't closed down there. You could have actually held the entire thing. You could have held. You could have. Again, riskier FOMC day, probably not the smartest thing in the world. So let's use an example from bar replay. Let's just go back on the chart, totally random. No edits to the video or anything like that. We'll just get to the next session here. Sometimes it takes a minute. There's 8 o'clock. Little daylight savings time. Whoops. Let me go down on the 5. Daylight savings time is throwing off this indicator, so I got to fix it real quick. Okay. All right, play this out. There's 8:30. What do you see? Perfect example of what I said. What do you see? You see a 6 candle, 7 candles down on a 5-minute time frame. Let's zoom out. And I just want to ask you, now that you've gone through this, who is in control? Buyers or sellers? Right? Where is the biggest? I mean, this one's a no-brainer, obviously, right? It's kind of stupid to ask, but I wanted to make a point. So, doesn't mean that we don't go down, but where is price ultimately probably going to go? Up, right? Okay. So, haven't broken the range yet. We wait for that to break. Let's see what happens. Okay. We're breaking to the upside. We have a 6 candle rule to the down 7 candles, actually. But I want to ask you something. And this is all about practice and spotting this, right? So as you see these candles speeding up, what happens at the tail end? Does it speed up or slow down? Does it look like those candles are speeding up or slowing down? The answer is slowing down, right? You have it's kind of like a stop of momentum here, a whatever candle, and then a reversal. Where's the higher time frame momentum? To the upside. Now, temporarily, yes, you have a red line here. This is the center line. That's temporarily, right? Because the market just opened and everything. And I don't care what happened pre-market. News, whatever. You can say data wake up here, grab whatever. But the reality is, this is what we have. So this is a trade. So we're going to pop this on. We'll zoom out a little bit. Pop this on the board. Okay. And 30 point to our target is 30 points. Let's go ahead and play this out. Now, a little bit of candle theory here too. Something to note, right? If you rock with me daily, it's something I can't, once you see this, you cannot unsee it. But we don't have a bottom wick and we don't have a top wick. It's kind of weird. So usually candles have tops and bottom wicks. So what would I be risking on my account? Okay, well, because the bands, we don't have any safety with the bands underneath. The bands are above us, right? So this is a very risky trade because there's no secondary position to be taken. This is just literally stop loss, or it's like take profit or stop loss only, right? So hard stop, hard TP, that's probably what we're doing. So let's go ahead and play this. Oh, and I'd be risking less. I'd be risking less, right? Because of this. So this is more like a C setup. Even though, what do we have going for us? We have high time frame momentum going for us, right? But structure's not with us. The red band is not with us, right? And yeah, no bottom wick down there is not with us either. That's kind of weird. Let's play a price out. Let's see what happens. So she breaks, she closes, hits TP. Okay. Now, look at where price is at right now and start asking yourself, like, what kind of setup would this be if she pulls back? Here's the pullback. That's a valid entry. So do you take it? Do you take that valid entry? Okay. Do you take that valid entry? Well, you have everything on your side now. Minus what? Well, high time frame structure. That's still on your side. So you're yeah, everything looks good. It's like an A setup. So let's go ahead and grab this. There it is, 30 points. Play it out, and we hit again. So that's 2 trades for the day. If you're really crazy, staying in this, going again, I don't know. I don't know what to tell you. You're over trading. You're overthinking. Look at the 6 candle rule. Is that speeding up or slowing down? It's kind of slowing down, right? And this is a risky trade because it's slowing down and you're already up at the highs. So look, let's go through the next day. All right, let's go through the next day. I got my fun chart up. Okay, 7:30. Let's go down to 5. And okay. Let's go ahead and go to 8:30. All right, here comes the opening range, right? First 15 minutes. Now I'm waiting for that candle body to break. And then we'll go, once it does, we'll zoom out and do our analysis. And hopefully I'm gonna show you one that has multiple entries because we can do that as well for dynamic money management. There it is. Okay, that breaks. So we'll go with that candle right there. That broke. Let's zoom out. What do we see? Everything is still looking up, right? Everything's still looking up. So once again, not really going in the direction of what we want, right? So this is going to be an entry, but it's not going to be a very solid entry. I have to zoom out. We don't want like 13 points. That's too tight. We had a tight consolidation range. This whole range is super tight. What is this? Yeah, 50 points, super tight. So basically, I'm going to zoom out. I'd probably go with like a 25-ish point stop. And that's just sort of, when we have tight consolidation ranges, I can't do like 10, 15 points. That's like micro scalping. Not going to be very successful trying that. But we can go with hard stops, right? And let's just say I'm risking like 0.5% of my account, 0.3, probably like 0.3. Okay, here we go. Play it out. Okay, that hits TP. Looking good. Now, would you take a secondary trade right here? This is exactly what I was going to say. Do you take this secondary trade right there? Probably not. Probably not. The higher time frame momentum is up. The chances of having a flip day are pretty high. So price could just come on the opposite side of the range, flip, and now you're going in the opposite direction and you're trying to, you know, and your invalidation zone is out here. Remember, we have this invalidation zone. Sorry, I'm not thinking of absolutely everything in this video. It's kind of off the cuff, but you know, that, oh, shnikes. There you go. Case in point. I mean, there you go. So obviously news at 1 probably kicked in right here. There you go. I'm not taking that trade. Why would I take that trade? But yet you get people that don't think about this, right? These are the decisions that you're making. And I just feel like that's what's keeping you in this little rat race circle of just like round and round and round, depositing more than withdrawing. You know, it's the same crap, listening to the same crap about where to place your stop, having entry model, the best entry model I've ever seen, you know, and like I use that terminology too, but the reality is an entry model that is very simple is good. If it's simple, then it's good. Really, so again, really tight range. Like, let's just go somewhere else on the chart because obviously this is an out of control pump. Maybe that was just a fluke, right? Here, you can just look. This would have been, look at this. I'm going to zoom out and just ask you, like, let's look and see. You know, so we do have a little bit of negative momentum over here, right? This would be like the winner out of the group. And then price kind of goes and spikes up right here, but not as big as this, yeah? Okay, not as big as this for sure. All right, so down still again, right? But price went up. No worries. Maybe she's changing momentum. Look at what we would have done. Ready? We would have gone long here, right? Out the gate. That would have been an easy win. Price hasn't even pulled back. Let's see. Let's wait for the pullback. Do we take the pullback trade? Well, I wouldn't, just simply because this hasn't proven to be the biggest momentum shift yet. Now look, now it's proving it, right? It's proving to be the biggest momentum shift. So guess what? The next day, look at the next day. Watch, I'll go to the next day. What am I going to be my next day alignment is going to be with that shift. Does that make sense? Now I'm thinking, okay, next day comes around, I'm looking at positive momentum shift because that's what price did the day before. It showed us it wanted to go up. So if I go back down to my 5, I zoom out, in my visible range, what is the biggest shift? What is the biggest impulse? It's up. Do you see that? It's up. Okay, very simple. Look at that. Look at that, how simple that is, right? It doesn't mean we don't follow our strategy. I hope you guys are enjoying the video so far. Smash the like button, subscribe to the channel if you're new. 6 candle rule. Here's a 6 candle rule. Does that look like that's speeding up or slowing down? So where's my target for this? Right out here. A little bit close, right out there. How many points is that? About 15, 20 points, 15-ish points. Okay. I'm not getting in that trade, but how do I know that? Because it's momentum, temporary momentum. Again, smash the like button if you're getting something out of this, man. Get the yellow YouTube going. All right, so here we go. 15-minute range, break to the upside. We got high time frame momentum on our side. We got blue. We got everything going for us. So now you get to see what happens. What do we do right here? Okay, we go to our auto. We're going right here. Boom, 27 points. Let me make sure that's right. Yeah, 111. It's actually a little bit further than that, about 30 points. Okay, so we're going 30 points, but guess what I'm risking on this trade? Well, a couple of things, right? So here we go, a little bit of candle theory. You can't unsee this, like I said. There's no bottom wick here. So price could just come down, create the bottom wick, and then go up. So I'm not saying that is going to take, it goes from like an A plus to an A, just because of that, for me, okay? So I would be risking, and I'm going to show you where this looks now. I'm gonna be risking like more. If my normal was like, 1 micro, let's just say I'd be risking like 5 micros right here. And I probably want to trail. I probably want to get as much out of this as possible. My invalidation zone down here. And that doesn't mean I have to wait for that to get hit. Okay. Let's see how this pans out. Here we go. Next trade hits TP. 6 candle rule at play almost, not quite. Nice, we're still going up. I'd like to see if I can maybe trail this or at least get in a multiple position trade, which doesn't even look like it's gonna happen because now we'd be protecting ourselves. So there's consolidation. We'd be using the shelf method at this point, and I would have probably trailed that a little bit further. But everything looks good there, right? So we step up, we lean into the trade when it looks good. This is a very tough thing to do, man, because most people can't do that just because they don't wanna wait. It takes time, right? You want to grow your account quickly. You don't want to wait. So with that being said, I trade live Monday through Friday. It's $100 a month if you want to come trade with me live. It's a 7-day free trial right now. Everything you can find is on School. But this is a free group right here. This is the free group. Link is in the description. You can join this group for free. All right, go through the training. We literally give you the roadmap in here and go through it. Anyways, with that being said, I hope this video gave you value. If you're looking for something consistent, if you're looking for something that works, this works. It's consistent. I do it every single day, and so do my members. And so, I don't know, man. I just ran around from strategy to strategy for years trying to figure it out. And instead of doing that, maybe you could shortcut your path to profitability. That's it. That's all I got for you. All right. Happy trading. See you in the next one. Peace.